Good afternoon, everyone. Welcome to our Building a Stock Portfolio webcast. I'm Connie Hill. Happy to join you here today. Kevin is out and asked if I could help him out, and I said I'd be happy to. This is a great class. Last week, Kevin got to the point towards the end of the class where he wanted to build in a little bit more diversification inside the portfolio. And he was looking at maybe some of those sectors that didn't have a lot of representation yet. He was heading out to utilities, so I thought we might just pick up where he left off in terms of building that portfolio. Now, I am joined in the chat by good friend, fellow trader and coach Ben Watson, great veteran of the markets. If you've gone to live events, you'll see Ben. If you listen to any programming, you might hear Ben. So glad that he's here. We're going to keep our eye on the chat, see what questions we can answer for you. If there's some I can't quite get to, then Ben will help me out. I hope you're following us both on X. I'm Connie Hill CS. He is Ben Watson CS, and we'll post educational content, things we're noticing about the markets. We'll post them out in our X account if we think you might find them interesting. Well, let's go through our disclosures and get down to business. What we talk about today is intended for informational and educational purposes only. Don't consider it a recommendation. Options carry a high level of risk and are not suitable for all investors. Probably won't do much of that today. We'll be using the Paper Money software application. It's provided for educational purposes. And I think it's a fantastic place for you to practice learning the different strategies that you want to trade. For the sake of simplicity, we won't take into considerations commissions, but you would want to do that as you're doing your work. Past performance is no guarantee of future results. Investing involves risk, including the loss of principal. There are a couple of differences between the paper money account and the live account. One of them has to do with options, what we won't even really be getting into, where short options won't be assigned early in the paper money account, but they can be assigned early in your live account. All right, seeing lots of familiar names here. I'm happy to see that you've joined us here today. We're going to take a quick look at the markets, see how we ended up. Probably most of you have been tracking that already. You know where we ended up. It will get into our technical analysis that we're going to use here today and look at a lot of examples. Now, let's head over first to Thinkorswim platform. And I've got up here kind of a 6-month chart of the S&P. And you can see the moving averages, and these are ones that Kevin uses all the time. The green line, my colors are probably different than his, but the green is a 200-day moving average, so that really longer term. The red is a 50-period moving average, and this blue one is a 20-period moving average, which is kind of the slowest and gives us an idea of what is short-term trend, if it's heading up or heading down. And I would say right now it's more on the flat side here. Kind of been going flat through the month of June, and as we entered into the month of July, not a lot of movement. Now, another technical indicator that we'll use in our class today is that ATR. It stands for average true range. And so it gives you the range on the last 14 trading days that whatever we're looking at, in this case SPX, or if it's a stock, what that range is. And when you're thinking range, what we're looking at is the high points and the low points and taking the average of that. So for example, today, the SPX moved from, the high was 75.15.31 and the low was 74.67.86. So you would just take the difference of that for today, but then it's averaged over the last 14 days. What has that number been? So today, when the market closed here, looks like for the SPX, it was 80.49 would be the ATR that we might pay attention to and use. Now, last week, one of the big points, I think, of this particular class, one of the important things is the analysis of your portfolio. Now, I tried to bust into Kevin's account and I could not do it. All right. So What I did do is I took a look at some of the positions that you guys talked about last week, just to kind of see maybe where they stood, so we could at least take a peek at some of them. We won't review every single position, but we will review a few here. So what I'm going to do is, maybe for simplicity, just make this a 3-month chart, because we're going to be analyzing really short-term price action here. So first stock we're going to take a look at is, and I know a lot of you follow these trades along with Kevin. Some of you are putting them in your paper money account so that you can practice along with him. I think that's a fantastic thing to do. All right. So this RSG actually was in pretty good shape here. In fact, last week it had just kind of moved above. That would have been on the 14th, which is right here. It was really staying nicely above this 217.50-ish area. And it was kind of looking like if it stayed there and made a nice measurable move forward or up, that maybe we could adjust the stop loss and move it up so that it was just a little bit below maybe the support area, or if we decided on a particular moving average, then maybe we could move it up. However, it stayed in that range, has been nice and good, of course, until Kevin left. And then because he left, I'm sure this is the reason, just kidding, that the stock broke down below that support area. Now, the stop that had been in place on this one, oh, darn, I didn't write down the value. Basically, it was placed below the 20-period moving average and the 200-day moving average. So it could have been caught in today's price action dropping down. It didn't end near its lows, but it very well could have come in and triggered here. So next week, when you're looking at this, you'll probably have an opportunity to look at it. You can see if it really did hit the stop there today, like I'm anticipating that it did, based on where it had been placed. Okay. And if you have more details about a particular trade, feel free to share it with us. Okay. Or something that you happen to notice. Now, another position in the portfolio is Dell, computer maker Dell. Some of you might even have Dells in your house. On Dell, the stop that was being used was 391.12. Okay, 391.12. Well, where is 391.12? I'm going to try to maybe make a mark here. Let's just do with the price level. What did I say? 291.12? 391.12. Kind of get it out of the way. Whoa, we're getting close. Okay, I'm just going to edit it here. So we'll put in exactly 391.12. And that's where the last stop had been placed. Whoa, it was in really good shape until when? Might have hit the stop loss here on July 16th, but definitely came down here to touch it and probably go below it on the 17th. Okay, so if you're trading along on this position, you might have been stopped out there. Now, one of the rules that Kevin uses in this class to place the stop is deciding which moving average is the most relevant, right? And then we'll go one ATR below whatever that moving average is that we are deciding is the most important one for the stock, the one that seems to be responding to. If you are somebody that maybe was following along on that trade and you wanted to put an ATR move below the 50-period moving average instead of this 20, your stop may have been lower and it might not have got triggered, okay, because it would be 31 bucks below the 50, so it would have been down in this area somewhere, which might not have been triggered. All right, those are the sad stories of the day, but let's talk about the good stories of the day. Let's go to first trade from last week. Was Kraft Heinz, which is KHC. And on Kraft Heinz, there was a buy limit at 25.50 that it looks like it got into. and a stop at 22.97. So again, if I come and draw a line here at, I want a different line, 22.97. It's not even close. 22. Whoa, 22.97. It is like way in the heck down here. Maybe I wrote that down wrong. That seems like awfully generous for 22.97. If you had a different stop on that, feel free to tell me. Oh, okay. Beth is telling me the stop on RSG was 213.69. Even though I had written down, oh, okay, hadn't written down that one. Okay, it was 213.69. Thank you, Beth. Appreciate that, Beth. All right, now if the stop really was at 22.97, if I followed instructions properly, then we would look at this and say, oh, nice. It hasn't even come close to that stop loss. And that one looks like it maybe was based on being below the 20 or the 200 here, or actually 50 and 200. Kind of colliding right there, the 20 just moving above, or the 50 moving above that 200-day moving average. In any case, what we would be looking for is maybe a new support area to move the stop loss to. And if, since you've entered into the trade here, we have maybe some old resistance at 25.5, maybe is starting to act as support here. We'd really want to see a nice bounce off that support area. And if we do see something like that, then you might have justification to increase your stop loss so that maybe you're at least trying to book some profits in the trade, even if at this point it's fairly small. But again, you'd still probably want to incorporate the ATR on that one. And the closest moving average at this point is that 20-period moving average. So that's quite a ways down from where the price of the stock is right now. Now, Beth says we sold half the position last week and kept the stop. So I know we divided it up into a couple of positions, 200, and then I take it back, 100, and then a separate order for another 100, so they could be treated differently. So it sounds like if Beth is right, and I trust Beth, that maybe that half portion, the first 100 shares, maybe was taken. Maybe it hit whatever the target was there. A question from Mark says, do you have to link to schedule a call with the Thinkorswim group? Raf, I am going to let Ben dig up that information. On many people's and many coaches' notes, we'll do some post show notes and put some information in there. And some coaches will include that link to be able to have a one-on-one session with somebody from Thinkorswim. If some of you weren't aware of that, that is something that you have available to you. It used to be once every 6 months, and they changed it. It's now once every 4 months. Okay, so you can get in there a little bit sooner. But I will let Ben dig up that link for you. All right, great thing to ask. Let's see, you were in the workshop in Chicago. Excellent, Mark. I hope you enjoyed that last weekend. And they had a QR code there to set up a call. Yeah, we'll usually just put a link to it. So we'll give Ben a little task to work on for us. All right. Those are the 3 positions we were going to review. Now, I wanted to get back to this idea of building out the portfolio, kind of picking up where Kevin left off last week, where he wanted to get into some utility stocks. Now, some of you that are absolute regulars, I'm going to count on you here because I think I know the scan that Kevin likes to run, but I'm not positive. Okay. I know he likes to take advantage of sectors and industry groups that are in favor, following the general direction of the market and so forth. And on the scan tab, I have a scan here that shows we're looking for some average volume above the 50-period moving average being 500,000, and then looking to make sure that each of the stocks is above the 20, the 50, and the 200-day moving average. And then I think what Kevin does is he goes ahead and he brings in, instead of say scanning an S&P 500, he might say, okay, let's just go scan in X group. And so I ran it through here initially doing the S&P 500 and then adding in a column here to tell us what sector the stock is in, okay? So if you want to modify your columns here, just go to this little gear over on the far right, hit customize, and then I just grabbed sector and industry. And I do keep those as part of my scans because I utilize them a lot. And then what I did is I ran that scan, and you can see here, the last time I ran it, it had 155 stocks. Well, that's quite a few to look through. But if we were saying, hey, we're going to focus on utilities here and maybe something else that's upward trending, right? Then we can maybe just work from this screen here. Although I did go out, I saved all these stocks and I put them in a watch list called Bullish Portfolio with today's date on it. Okay. And so those 155 stocks are here. Did the same thing where I added in the sector here. So customize. And I got rid of the things that are redundant on here. You have the ask, the bid, the last, and those are usually really close together, right? Those prices. So I just kept the last, got rid of some I didn't necessarily use, and put in some different things here that I thought might be helpful, like what sector does it come from? So we could kind of sort it the same way as the results. Oh, good. Ben found that link. Thank you, Ben. Oh, Beth has a correction from KHC. Okay, not a problem, Beth. I said I trusted you, and I still trust you. But yes, when we have an update, we give an update on something. Appreciate that. All right, so going back to the scan, we have a few utility stocks here. And I wanted to open up this for us as well. I brought in the S&P 500 sector indices watch list. You can find that under public. And it breaks out for us what the different sectors are doing. And I just have, say, a 3-month performance here and a 6-month performance, because it kind of gives us an idea which ones are acting favorably right now, which ones aren't. You could even, if you wanted to, put a 1 month in here if you wanted a little bit shorter time frame to make decisions based on, and done that in classes as well. We're going to use here, we're just going to kind of look at the 3-month and the 6-month. And what I want you to pay attention to is if the 3-month and the 6-month are going up, or if we've got kind of a mixed reaction. So for example, on the energy sector over the last 3 months, it's up about 3.01, so 3% roughly. But over the last 6 months, it's up in the neighborhood of about 22, so significantly higher over the 6-month time frame. Okay, so we're going to look at that as an indicator. Okay. So what are our ones that seem to be outperforming right now? So energy seems to be doing well. I am going to add in the 1 month here. I am kind of a 1 month person. So let's go ahead and add a 1 month % change. Let's add that, and I'll keep it in an order here. We probably don't need all of that to see what the sector is. If you wanted, you could sort on it. Okay, so the best performing sector this month, okay, for the 1 month would be energy, followed by healthcare, financials, real estate. And then we have utilities that's just kind of been holding its own for the most part. So we can see down in the last month, but up 3.5% for the 3 months, 9%, 9.2% on a 6-month. Now, utilities don't really strike most people as exciting, but they can really add stability to a portfolio. And I think that's where Kevin was going with this, is add a little bit of stability to the portfolio. So as I was looking at the results of this scan, And if you want any other parameters in the scan, feel free to correct me and let me know, but that's what this is based on right now. And so I went ahead and I looked at some of the stocks that were in some of those sectors. So I'm going to head my way up here to, let's see where utilities are. There they are. It looks like we have about 5 stocks in utilities. And so I just was looking at them from the perspective of, do they meet the qualification? Are they really all above those moving averages? And some of them, it's just today that they are closing above it. Now, this one's been above it for quite a long period of time, since I should say the first of the month. I guess that's not a super long period of time, right? It looks like maybe it's bouncing off that 20. Actually, that's good. Yeah, that's going to be our 20 period moving average here. One that I thought might be interesting for us to take a look at was this EIX. EIX looks like they're maybe taking a little bit of a bounce here, maybe a little 2-day pullback, looking for maybe say like a close above the high of the low day. It is really close to that. It is not perfect. Yesterday's high on that low candle day was 78.52. Looks like it closed here at 78.17. So some might say, well, I like the movement of this candle going beyond the body of the previous day's candle where it had its low. Some people might say, I'm going to see tomorrow if it gets a hold, a close above the high of the low day. Some people will just take a move off the high of the low day. So in order to get a move or a trade above the high of the low day here, we'd need it to go higher than 78.52. Okay, so I'm going to open that scratch pad, 78.52, and we're going to do a buy stop on this. Which with a buy stop, it says wait until you get to this price before filling me. If you put in a limit, it would fill you at any price better, which, if the price of the stock opened exactly there tomorrow, then we could get filled on it. So we're going to have this set up a little bit maybe different than what you might be used to. Let's go here to the ask price. Looks like it's kind of spreading out a little bit here at night. Last price was 78.17. And so what we're going to do here, we have some class rules we like to follow. What are the class rules? Well, we're going with an account size of $100,000. We're willing to risk 1% in that account. So we're willing to risk $1,000 per trade. That doesn't mean how much we're willing to spend, but how much, if everything in the world went wrong with it, that it might come down and hit a stop at that $1,000. And then the stop loss, we like to place 1 ATR below whatever moving average seems pertinent, whichever the support levels seem to really indicate the most. So let's look at that for a moment. As we look at this, and maybe I'll go out a little bit, what moving average do you think is most appropriate for placing the stop on EIX? I would love your input here. Feel free, go ahead and chat in your answer to me. Remember, the blue is a 20 period, the red is a 50 period. And if we come and look back here, a little bit, let me go to a 6-month chart here. We can see, well, it's kind of gone below the 20 frequently. Usually when it goes below the 20, it doesn't always go below the 50, but the 50 had been on such a nice run here that really both those moving averages kind of converged there. And so sometimes it will go below the 50 when those moving averages are really close. Doesn't seem to just bounce off the 20, although there are a lot of touches there on that 20. Okay, so what do you think? What do you deem the most important moving average? Would you say we should put an ATR based on the 20-day moving average or the 50? I kind of have an idea of where I want to put it, but I also want to see what you guys think. This can be a democratic class, right? I'm not seeing any answers on that yet, so I'm going to start calculating what my thoughts are. And on that, let's do this. Let's go My little calculator got hidden. Let me grab it out of here. Come on, little calculator. There we go. I am thinking Ricebird likes to use the 20. MBH has a calculation of here of 74.75, which would be pretty close to where my mouse is. That's 74.80, which might be just a little bit lower than the 20-period moving average there. Ricebird likes the 20 minus the ATR. Jay Richardson likes the 50. Okay. Because it drops down below the 20 occasionally, and it could still be in a nice uptrend doing that, I'm going to use the one a little bit lower. I'm going to go with the 50. Okay, but I did want to see your feedback, what your thoughts were. Somebody could have said something different to convince me otherwise. Looks like the 50 is at 72.82 right now. So we'll go this again, 72.82 minus the ATR, which looks like it closed at $1.60. We'll go $1.64. I would say put a stop in about 71.18. All right. Now that we know where we want to get in, we want to get in at 78.52. We're going to put a stop loss here at 71.18. So we have a basis. We can start to calculate our risk per share here. So as we come back to the calculator, let's go 78.52 minus 71.18. Oh, that didn't go good. Let's try that again. 78.52 minus where our stop would kick it, 71.18. That's going to give us risk of $7.34 a trade. So let's take the $1,000 divided by that risk and see how many shares we can do in this account. So let's go at 1,000, divide that by 7.34 risk per trade, or risk per share rather, of 136.23. Okay, 136. I'm going to leave off the 23. Now, we also don't want to spend more than $1,000. Eyeballing it here, we're going to be close, right? I should say, I take that back. I said we have a maximum we want to have in this account, but I don't have a rule down for that. If you guys have a rule for that you would want me to incorporate that, then let me know. Highest put open interest is at $70. So you think, oh, that's where you got your 72.50 from, where kind of where your math came in. Okay. So if we do 136 shares times the current price, and I'm just going to use the 78.52. Come back, calculator. 136 shares. Actually, I guess we don't have to multiply it by anything. Well, let's see how much we would spend on it. Okay, times 78.52. We spent about $10,000. And if there is a rule that says you don't want to put more than 10% of your portfolio into any trade, we would be exceeding that. Okay, and I'm thinking that may be a rule in your portfolio. You guys can correct me if I'm wrong. So let's cap it at 10,000. We don't want to go more than that because that would exceed our 10% of the portfolio. So we'll go 10,000 divided by the price we said would buy it at, 78.52. So we should just do 127 shares. So not a ton different, but a little bit, enough to make a difference. Let's open this up here. $127 is what we came up with. And then we're going to change this instead of a limit. We're going to change it to a stop. And that means do not fill me until you get to the price I want you to get to, which we're going to put at 78.52. so that we're exceeding the high of yesterday's candle, right? And then we need to put in a stop loss here. So let's create an opposite order. And we decided as a group, I think we said, we're going to go the 50-period moving average minus whatever that ATR was, $1.64, which gave us that 71.18. Okay, that's where that value came from. So we'll put in 71.18. And then this should be 78.52. It more likely than not, it could get there tomorrow, but it might not. So we're going to make sure we're going to put both of those orders as good till canceled. All right, we're going to send this off. We're going to put it in our group called stocks. All right, that's trade number 1 from the utility sector. Okay. Next up, I've got a couple of interesting ones here. PLD, where did PLD come from? Well, believe it or not, the real estate sector is starting to uptrend a little bit. It's kind of interesting because interest rates are still fairly high, but some of these real estate stocks seem to be trending quite well. So for example, PLD looks like it's up about 5.5% in the most recent 3 months over this. Oh, I got rid of the 6 months. I must have hit it. Oh, you know what? I don't have it on here. I just had the 3%. It was the other one below, the watch list below, that I added it. Okay. There is something that you want to be aware of, which is when you're dealing with the real estate sector types of stocks, you want to make sure that you know if it's a real estate investment trust or not. Okay. How do we find out if this is a real estate investment trust? Let's go to the Analyze tab. We just need to do a little reading. And we don't have to read for very long. Up here, when we see a little bit longer amount for the name of this ticker PLD, we can see over here, oh, it's a real estate investment trust. Now, and down here in the verbiage as well. Now, with a real estate investment trust, the nice thing about them is they have some different taxing rules you want to be aware of, but they pay 90% of their, what do we decide that was going to be? Their taxable income. 90% of their taxable income must be paid out. And so some of them will do that in the form of a dividend. We come over here to the trade tab and we see, like right here, it's saying it's about 1.07 quarterly. It's just something you want to be aware of. So do a little digging around, maybe look at the prospectus on anything that you see that might be a real estate investment trust. Now on PLD, it's nicely above all these moving averages. In terms of a potential entry signal that some traders might use here, might be a little hold here. Stock ran up, got up to that 153, and then it just had a couple of days of pulling back. So if you saw a flag pattern here, there could be a flag, or yesterday's high was 149.61, and today it closed at 149.94. So we're looking at a closing price here above the high of the low day. So some traders like to use that. Looks like its ATR is about 345 here. So let's go ahead. Let's see how many shares of this we could purchase and where our stop loss should be. So as far as an entry, it meets our entry conditions. Let's assume we can get in for the last price. So let's assume we can get in at 149.94. And we'll just put that as our entry. If it feels us a little bit nicer than that, great. And then on our stop, which of these moving averages do you think is the most relevant one? I'll go back there. We see the 6-month chart. So sometimes it goes down below the 20. It doesn't seem to bounce. It hasn't bounced a lot on it. It's even bounced a little bit lower than the 50 here. And the 50's had a really nice steep incline. Let's go back to a 1 year because the stock has trended so well. So that 50 moving average keeps crowding up into the 20 period moving average because of the nice trend that the stock's been running at. And of course, our 200-day is clear over here. Now, as we maybe zoom in here a little bit, you know, the 200-day is quite a ways down there. And there could be times when you say, you know, maybe you don't want it to be based off a moving average if it doesn't look like it uses a moving average. And so you might want to decide, well, where is the lowest horizontal level of support? Sometimes people might use a diagonal level of support. Okay. Just kind of think to yourself what you think might be the most appropriate here. Okay. We're going to, you know, it hasn't really, I wouldn't necessarily, I don't want to say we wouldn't trust it, but it doesn't have a nice pattern formed where we're seeing a level of support tested. And it would be nice to see something like that, which, yeah, which I'm not seeing a lot of. Now, maybe this level around here, this maybe could be considered a support level where we see that it's come down to, remember, we're looking in areas, so it's come down to support, come down to support. That looks like the most closest one that it's bounced off of, okay? So with that in mind, let's put the stop loss here. Let's go 1 ATR below 138.37, okay? That should give us the value we're looking for there. So 138.37 minus our ATR, which is 3.45, which let's just kind of move that down so you can see that better. 3.45, it's going to give us a value of 134.92. All right. Let's see what risk that gives us on the trade. We'll take the difference between where we'd like to get in. Of course, no guarantees, right, that it'll actually go exactly there. But let's take that 139 or 134.92 as the stop. Take the difference between that and the entry price, 194 or 149.94. That's about $15.02 of risk. Now, you might be thinking, oh, that's a lot. And you're right, it is a lot, so we're not going to buy as many shares. However, if we start to see that a new support level is being created and honored, then we might use that as an opportunity to move up the stop loss. But we want to make sure it's something we feel like we can test, or I shouldn't say test, trust. Something we feel like, okay, we've seen a bounce there. We feel comfortable with that, okay? So next up, let's see how many shares we could get here. So 1502 is the risk. And let's say, on that calculator, we're going to put $10,000. Divide that by 1502. That is a lot. I think I did that wrong. Let's try it again. $1,000 divided by 1502. I could have had some numbers left over in there. Okay, 66 sounds a lot better there. So we're going to just do 66 shares of this one. And actually, let's do this. Let's do a first by custom with just a stop loss. We're not going to put a target in. We're building out a portfolio that we're hoping just kind of adjusts and modifies as potentially the SPX goes up. So our price here was 149.94 was the last price. We'll hope to get filled there. And then we said our stop price is going to be at 134.92. Now remember, it'll trigger a market order there. Got an extra number. Let's get rid of that. It'll trigger a market order. based on the price of the stock going to 134.92 or lower, but we're not guaranteed that price. It would just fill it whatever the next available rate is. So if it has like super bad news and it gaps down, it might be a little bit lower than that. And then we're going to mark, we'll just do this entry as a day order. We should be able to get filled on it. If we don't get filled on it tomorrow, we might want to come back and look at it and see why. So let's just put a GTC on the stop with the assumption, hopefully it'll fill us tomorrow. And we're going to go ahead, we're going to send that one off. And I'm just going to put that in my little stocks bucket. All right, so today, let's see what we've been able to accomplish here. Wrong section. Where did my shorts, my stocks go? Here they are. Okay, we did EIX. Hasn't filled yet, right? We've got a buy stop order on that, looking for it to move first and then fill. And then we did PLD. One you might want to take a look at that we did not have time to review is actually a couple of things here. Maybe you might like the trend here on Apple. It's certainly above all those moving averages. And the thing that was interesting to me about Apple today was that it looked like maybe it was holding support at the midpoint of this tall candle. Sometimes when you have a big candle like that, the midpoint will act as support. And so it was interesting because it looks like it came there, just did a nice little bounce that seems to correspond with the midpoint of that candle. A different one is Host, HST. And what's nice about this one, clearly above the moving averages, but just today, I guess it was yesterday, moving above that shorter 20 period moving average. And sometimes traders like to see a fresh new move over that moving average that qualifies for an entry. Does that make sense to you guys? So those could be some you could consider doing your own practice trading on. Now, I do hope all of you are subscribers. Ben is encouraging you to subscribe to our Trader Talks channel, and I do as well. When you do so, let me find my thing for it. Then it makes it so much easier to find the content that we teach. So last class of the day is here today, or here right now, but getting started with, no, that's not it. That was earlier today. I want to go to the Trader Talks. In today's market will be first thing in the morning. Brent Moores will be there. And then I believe our Ben Watson. Oh, you know what? I'm off a day. Ben taught today. I was thinking Ben was going to teach in the morning, but I was off yesterday. So in my mind, I'm not quite synced up to today is Tuesday. In any case, you can find our content. You can see some of the more popular videos that we have. There's some shorts, and then you can get into what we call our bite-sized contents. We'll put these little videos out there. They're less than 10 minutes each, just kind of teaching you a little topic. And some people like to spend some time in there. All right. Appreciate your attendance here today. And I hope I was able to answer all your questions, or hopefully Ben picked up a question. If not, go ahead, let us know. You can make a comment on the video. Those of you that are looking at it just only on the recording, when you have questions, that's how you get your questions answered. Since Ben and I are not sitting there, go ahead, put your comments in YouTube, and we'll take a look at those throughout the day. So have a great evening, everyone. I didn't see a survey out there, so I think we're off the hook for that. But become a subscriber. Ben and I would love a follow on X. Ben Watson CS, Connie Hill CS. And if this was helpful to you here today, go ahead and hit the thumbs up button on the way out. That'll help others find the content as well. Have a great evening, everyone. We'll see you first thing in the morning at the opening bell. Bye-bye.